So today we will be taking topic fixed assets management basics. So first of all, we will be taking topic depreciation. So depreciation is an accounting concept that refers to the gradual reduction in the value of an asset over the time. So it refers and it reflects the wear and tear, usage or obsolescence of an intangible asset or tangible assets. So like machinery, buildings or equipment which are purchased for our business use. So depreciation is essential because it helps allocate the most of an asset across its useful life, aligning expenses with revenue in financial reporting. Then comes our types of depreciation. So first of all, we will be taking straight line depreciation. It is the most common and simplest form of depreciation which are used by organization where the asset losses an equal amount of each value over the year of its useful life. For example, suppose we have purchased a machinery which is worth of 50,000 rupees and its useful life is 5 years, which is number of residual year. So if we want to calculate the depreciation will be costing to us every year, it will be around 50,000 divided by 5, which equals to 10,000. So 10,000 rupees will be the depreciation applied every year on our tangible assets. This is our straight line method where equal amount will be charged for depreciation. So, like that only, we will come to our next type of asset. So, depreciation. So, it will be like declining balance depreciation. So, in declining balance, so here a fixed percentage is applied to an asset remaining, like whenever we will be purchasing any asset, we will be mentioning in our books that this is the book value of the asset. So in declining balance depreciation, a fixed percentage is applied to the assets remaining in the book value each year. It leads to higher depreciation in the early years and less in later years. Okay, so here fixed percentage is there and fixed percentage on remaining book value which will be leading to higher depreciation in initial years and lower depreciation in later years. So, if we want to calculate, let's suppose we are purchasing a machinery, we have purchased a machinery and the useful life is 5 years. We will be taking same example, but the rate is, we will be defining rate as 20% we will be taking. So first year amount will be 50,000 divided by, oh sorry, 20%, which means 10,000 rupees is there. So after first year depreciation, the value of asset will be 40,000. It is like 50,000 was the book value, and we will be subtracting 10,000 and we will be getting 40,000 from that. Okay. So then this is what 40,000 will be. And if we want to calculate for second year, so we have to calculate it on 40,000, which will be the remaining value, and 20% will be deducted, which will be costing around 8,000 rupees. So after second year DEP, the value of an asset will be 32,000. How come? Like 40,000 was the previous amount, and if we are deducting 8,000, so this amount will be coming. So this is how straight line method and reclining balance depreciation helps. So the features of depreciation. So there is systematic allocation of assets is there. It means like depreciation is spread all over the asset's useful life in a systematic manner, ensuring expenses are matched with income. Then non-cash expenses, where it doesn't involve actual cash flow, rather it is an accounting entry. Then comes our impact on profitability, where depreciation reduces taxable income and thus lowers tax obligations. Then reflects asset usage. So the depreciation rate often reflects how intensively the asset is used, that is straight line method, declining balance methods from that. Then adjustable rates. So depreciation rates can vary different on asset type, industry norms, and tax regulations. Then comes our benefits of depreciation. It saves our tax liability. Then it also calculates accurate financial reporting. Also, it helps in cash flow management, like it's a non-cash expenses. So depreciation helps maintain cash reserve while still allowing for expense deductions. Then it facilitates assets replacement, which means over time, funds saved through depreciation can be allocated toward purchasing new assets. Then it improves decision making, like in it helps in future planning or expenses related to asset replacement, aiding in budget and investment decision. So depreciation is critical for financial planning and gives an accurate picture of an organization's asset, values and long-term sustainability. Then if we come to our system setup in NetSuite applications, so the fixed assets management module in NetSuite provides tools for tracking, depreciating and managing assets throughout their life cycle. So setting up the fixed assets management system properly is essential to ensure that asset transactions, depreciation and reporting are accurate and comply with accounting standards. Then comes our asset types. So there are multiple asset types. First is property, plant and equipment, furniture and fixtures, vehicles, leasehold improvements, intangible assets. So these property, plant and equipment, furniture and fixtures, vehicles, leasehold improvement, these are tangible assets which we can see, touch and feel. Intangible assets which we cannot see, touch and feel. Then comes our land, building, computer, equipment and software, capitalize R&D costs. So this category in tangible assets are essential for business operations such as building and machinery and equipment. In these particular four tabs, the depreciation is applied as per straight line or declining balance method. In intangible asset, these are non-physical assets which with long-term value, such as intellectual property or software licenses. So, for example, for intangible assets, it consists of patents, trademarks, goodwill, and software licenses. What is goodwill? Goodwill is the market value of our business. Like if our goodwill is good, then we will be getting more customers in our organization or more vendors will we will be dealing with. So this is what intangible assets mean. Then comes our navigation. So in our NetSuite application, we will be navigating through this three dots. Inside fixed assets, we will be going to our setup option. Under setup option, we will be clicking on asset types. So this is how we can use depreciation NetSuite application. So we have discussed today the depreciation, meaning of depreciation and the types of depreciation, which include straight line method and double declining or declining balance method. Also, it involves the wear and tear and usage and obsolescence of assets. So we have discussed about benefits of the depreciation, features of depreciation, and also we have discussed about asset types which are involved in NetSuite application where we can apply depreciation methods, and also we understood the system setup of fixed assets. We have discussed about navigation of asset types in NetSuite application. So I hope this session will be fruitful for you to understand what is depreciation. We have discussed it from basics. So in our next video, we will be learning about the different types of assets which we use in NetSuite application, and we will be going through practical implications of fixed assets and depreciation in our next video. So stay tuned and thank you